Ladies and gentlemen, welcome back to the channel. Here in this video, we're going to be going over what happened today with AMC stock as well as the broader markets. One specific event kind of turned around the markets today, and I want to explain why that is and why it was deemed as positive by the markets. Now, I also want to discuss the events that are going to be happening tomorrow and a potential key breakout level for AMC stock specifically, in which tomorrow could be the day that we do break out. Hit the like button as well as subscribe to the channel. And let's get into it. So first things first, AMC stock is up about 2% today. Pretty good day for AMC. It appears as if your small mid-cap stocks, your Russell 2000, is outperforming compared to the others. So that's fantastic. Just causing an overall outperformance of AMC. Now, I'll tell you right now, the key level that I'm watching with AMC is this 50-day moving average. If you can get above that, then I do think the odds are good that you run quite a bit. Now, your 50-day moving average is sitting at $4.51 per share. And if you take a look, that could set you up for about 36% upside from there if we break out above $4.51 per share. That would put you to about your 100-day moving average, which is at $6.16 per share. In the grand scope of things, we were just there not that long ago, right? 2 earnings ago, AMC was $11 per share. So could we rally to $6 per share? Of course. I think there is, again, the overarching dilution fear that is hanging over our head right now. And I think that has subdued AMC for a while now. And it will likely subdue AMC in the future, especially if we don't get this commitment to, not getting dilution from Adam Aron. That's a big mistake that they continue to make. They continue to wait and imply that they're going to dilute shareholders again, when in all reality that they probably are. But, to not give us like a 6-month pause is, I think, a huge mistake that they are making. Now, earlier in the day today, I talked about the markets were down. The NASDAQ was down almost 1% at one point, and you've kind of seen a reversal since then. If you take a look at TLT made quite a big move here not that long ago, and that really got the rest of the markets moving. TLT had this huge candle, almost a half of 1%, 1 minute candle. These are 1 minute candles. So that was a huge move for TLT. Now, what happened was actually the 30-year bond auction that came in with better demand than expected. So this bond auction happened at 1 p.m. today. The 30-year bond auction, the last auction was 4.36%, and the actual yield on this came in at 4.331%. So you dropped about 3 basis points. Now, what does that mean? Well, it kind of works like a dividend stock, right? If people buy up that dividend stock, the yield falls, right? Let's say $100 dividend stock pays you $5 a year. Great, that's 5%. If everyone wants to buy that dividend stock and now it's a $200 stock and you still get paid the same $5 dividend, now what's the yield? Well, it's 2.5% if you're buying the stock at $200 per share. Hopefully that makes some sense. So as you see more demand come in for these bond auctions, the yields will fall. Now, why is that so good right now? Well, we just had inflation come in higher than expected. We have a little bit, of weakening economic activity, which could be a reason why demand came in good for this bond auction. In theory, if you are going to see a recession, a lot of investors, a lot of big money is going to want to lock in these high yields, because what's going to happen? If yields fall and then everyone rushes into the bonds, the price of the bond is going to go higher and the yield is going to go lower. So you win at this point if you're buying long duration on the bonds, in my personal opinion. Like, if you have millions of dollars and you're watching this video, I would stick a good chunk potentially into bonds right now, because stocks are really, really high. There's no arguing that. And if you are going to see a lot of rate cuts or the economy slow down, bonds should do well, as money goes into bonds as a safe haven asset, and or the Fed starts to cut rates. That's going to give you capital appreciation on the bonds. And in the meantime, you're going to collect over 4% on a 30-year bond. You know, you can't argue that whatsoever. So that was a little bit of good news in the grand scope of things. Again, maybe it does signal the economy slowing down, maybe a little bit more than expected. But at the bare minimum, that was good news for sure. So there is that, and that was the kind of the only big event that we had in the markets here today. Now coming tomorrow, you have PPI month over month at 8:30 in the morning tomorrow. That's expected to come in at 0.3% on your month over month basis. Now, PPI is more so related to PCE, which is the Fed's preferred measure of inflation. And last month, this came in a little bit on the hot side, right? It came in hotter than expected at 0.3%. If you look at December, you were negative 0.1%. If you look at October of 2023, you were negative 0.4%. Then you've seen a rise, and then you've seen a fall, then you've seen a rise, and now you're expecting another 0.3% rise. If we were to fall tomorrow, that's going to be great news. Is that going to happen? I don't know. Could you come in hot? Of course. If you came in at like 0.4, 0.5%, yeah, market's probably going to sell off on that. Now, retail sales is also going to be very important coming out tomorrow as well. You got to remember that right now, it seems like markets don't even care about anything besides the Fed cutting rates in 2024. It's like hot inflation, doesn't matter. The Fed's still going to cut rates in 2024. Even if it's not 7 times like we were expecting to start 2024, the markets are still expecting 2 to 3 rate cuts in 2024, and that's what the markets are paying attention to. Well, retail sales, if retail sales come in really bad, I don't think the markets are going to exactly like that, because we already know the Fed's going to be cutting rates. But if they're cutting rates for the wrong reason, that's a problem. If they're cutting rates because the economy is getting worse and slowing down and maybe heading into a recession, that's not going to be great. Now, why is retail sales important there? Well, 70 to 73% of the GDP report that we get is based on consumers spending money. So last month you were negative 0.8%. The expectation is positive 0.8%. Now, again, if you come in hot at like 1 or 2% positive, that's also not going to be great, because maybe that means the Fed's really not going to be in a rush to start cutting rates. And then if you come in really negative, that's a problem as well. So I think the sweet spot would really be just coming in line with expectations. I think that would be the best possible scenario for tomorrow. You will also get initial jobless claims, retail sales excluding autos, continuing jobless claims, all kinds of different secondary data points there as well. Also, 10 o'clock in the morning, business inventories month over month will be coming out for the month of January. Inventories also have a role to play with GDP. That's why GDP apparently was negative in the first 2 quarters of 2022. A lot of that had to do with apparent inventories. Now, you're expecting positive 0.2% month over month. Higher, the worse off you are as far as inventories. And that's pretty much it. You will have some housing data out of China, some loan data out of China coming later on tonight, but that's pretty much it. And then on Friday, Michigan consumer sentiment will be coming out. So overall, I think tomorrow is going to be a very big day as far as data is concerned, and I would expect quite a large move in the markets. Also, tomorrow and after hours, you are going to get Adobe, Blink, and Ulta Beauty that will be reporting, as well as PagerDuty. These companies can be important, specifically Adobe to the AI trade. Adobe has fallen quite a bit heading into their earnings, so odds are you probably get a surprise to the upside there, would be my personal opinion. Now, if you take a look at AMC on StockTwits, sentiment is neutral at 57. So decent there. Message volume is normal at 49, and the participation ratio is normal at 54. So nothing's really changing all too much here. These numbers are pretty much unchanged from yesterday or from what we have seen recently with AMC. So not too much of a change there as far as sentiment is concerned. 10-year treasury yields today up about 2.5 basis points. TLT is still down about a third of 1%. Even though you did have that good bond auction, I think people are kind of realizing that CPI report that we seen yesterday was definitely not the greatest for our markets. If you take a look at the stock tracker data, you do have in the money calls at about 10,295, out the money calls at about 270,000 for this week, in the money puts at about 31,000, out the money puts at about 111,000. So definitely a volatile week. Could be here this week for AMC. I think if we are going to get a big break up or big break down, it potentially will happen this week. I think that would make the most sense in the grand scope of kind of what we're set up for coming this week as far as the economic data tomorrow. Now, here in after hours, you will get some earnings as well. UiPath, Centennial One, Lennar, ESS, Vroom, GrowGeneron, Valco, FTC Solar, Anika, and Coin that will be reporting earnings tomorrow morning. You're also going to get Dollar General and Dick's Sporting Goods, as well as Futu, Canadian Solar, and Build-A-Bear Workshop. Dollar General could be an important one just to kind of gauge how the consumer is doing, but not expecting that to have too much of an impact to the broader markets. It's really tomorrow and after hours that will be important for markets. Now, if you take a look at option activity from hedge funds and institutions today in AMC, you do have 2 orders totaling $55.8 thousand with a positive order value of 27%. You do have June 21st $4 call worth $15,000. That is a positive order from hedge funds and institutions. And then you do have a June 21st $2 put worth about $41,000 as well. So not a lot of option activity from hedge funds and institutions, but some. Okay. Now, short interest percentage of free float, 12.91%. Down a little bit from yesterday, but overall rising quite a bit from the 7% low that we've seen recently. $147.01 million worth of short positions currently in AMC. Days to cover 2.12. 33.87 million shares that are currently sold short. Shares out on loan, 44.42 million. Cost to borrow, 1.09%. Utilization of 59.83%. And a short score of 67.03 out of 100. Cost to borrow max as well, sitting at about 3%. So, not the most exciting numbers here, but I do think they are trending upwards. And I think we're continuing to see some shorting activity in AMC stock that inevitably is going to come back and bite the shorts in the ass. Okay, let's just be honest. Eventually, I think AMC stock is going to go through a parabolic rally. And I think everyone's going to be very sad that they bet against AMC. A key critical level here in the short term is, again, that 50-day moving average. And then I think you have a decent little ways to run if you get above that to at least your 100-day moving average, which is around $6.16 per share. And then could you run further from there? Of course, your next level would be about $17 per share. Will you get there? I think you need to see some good news in order to get there. The RSI sitting at 46.5, and the MACD really not doing much of anything. So hit that like button as well as subscribe to the channel. Let me know what you think about this information down below in the comment section. You guys have a fantastic rest of your day, and I will see you in the next one.